Hey all, Brian here from quantlabs.net. Okay, so I'm going to give you a complete tour of this course here called Futures Options Strategy Overview. So if you're ever interested to know more, just come under product, click on, which will take you to this page, click on View Course, and this will give you more detail on what's available in this course, as well as you can always press play here to watch this video to give you another option to be introduced to this course. Which then purchasing, just go and click now here, get started now. That'll take you to the purchase link page, and you're off to the races. So what's included in this course? Well, it might be better if I just show you the back end and what it looks like. So when you sign in, you'll be taken to this dashboard, I guess, that will give you some description on some stuff. And before I start, I want to give you a little history on this course and the importance of it. If you're new to trading, I think it's so important to understand both the futures and options market because you'll see more forward-looking data using both markets and a wider view of what's available in the markets in real time, because it's a great indicator to calculate and forecast with accuracy, I might add. I can say that with confidence now, and this is what the professionals use. Even though you may not trade it, it's really good to have that knowledge, and it's even better when you can automate it. So futures and options is where it's at, but if you want to chase after the most lucrative uh, trading asset classes, definitely options, because you can get like huge returns if you choose, if your system or you choose right, of up to, I've got guys doing really well, six times 600% on their positions, depending on the assets that they choose, because the swings are so big in these asset classes. But you have to really know your data and really know your risk tolerance when you play with these instruments. All right, so when you come into this course, what you'll find here is we've given you a combination of both C++ and Python code. Um, so, we have here some recommendations to go through the Python course, the building infrastructure building block, to understand uh, the necessary components of a algorithmic trading course. But this course is also really good to give you proper foundation in trading, without a doubt. It's one of the best courses that I've come across ever. And when I say the course, it's built around the UC Davis course, um, around this from a few years ago. But it's there's a book on it from the author of the professor and the whole nine yards. So you get some blurbage here about the IDEs that I'm using, the integrated development environment. So how it works is you got 24 units in one module. Now again, remember, you're getting the source code. So how it works is when you log in, you'll be given this very first unit, which is enabled. So it enables you to link into it. So all you got to really do is just, which will be to here, you'll get the actual video of the original course, and some other links and so on and so forth. And when you're done with that unit, you just go next unit. Okay. Or I'm sorry, not next unit. Let me just move the farthest we can go. So usually you'll have to do something of called mark as completed. And what will happen is once you mark as completed, it enables you to go to the next unit. Okay, so at the same time, you can navigate back to the previous unit, so on and so forth. Okay, so if you come back and log back in, it may look like something like this. So you'll notice here we've got a little green check mark, which means we just marked that as completed, and we can now continue from where we left off. And let's say here, and we have our content again, and boom, boom, boom. Okay, and then just want to go to the next unit, just go mark as completed as such, and I'll enable you to go to the next unit. Pretty simple. Hopefully that's logical. So let's talk about the content. So typically, what we have here is, I said, we got 24 units. We cover all the history of the futures market. Remember, the futures market's been around for 100 plus years before electronic trading came in. So the foundation of all trading is heavily influenced by what goes on in the futures market. And then they added the options market maybe a few decades ago. And the beautiful thing about it is it enables you to watch a variety of things, be it treasury, euro dollar, and then that obviously greatly impacts your foreign currency for forex trading. And if you understand those markets, you'll have a much higher likelihood of doing better in the forex market. That's just one aspect of it. So here we can basically see the movements of what's happening in, let's say, the US dollar or the euro. And then we go into things like the basics of, let me just show you another thing, very important. You come under here in the second unit, okay, what you'll find is the overall source code. No, let me just go back to my unit here. Right here, second unit. There is source code available for all of the, right here. So when you download this, this gives you a couple of hundred algorithms off the get-go in C++. Okay, and it's a massive C++ class. But just basic stuff from the book already included. Huge benefit, huge time saver. Okay, so going back to our course here. So where we left off here, as you can see, there's a huge impact on the euro. And the other thing is you always want to look at forward-looking data. You don't care about where it's at today. You don't care about the past. You want to know where things are going. So you really want to focus on forward-looking data, which both options of futures gives you. As I said, we move in a demand of storage. That greatly impacts storable commodities like agriculture or oil or energy product. There's the intemporal commodity pricing, which is very important to understand that relationship, which greatly impacts the day-to-day changes of particular commodity pricing. Same with the intertemporal pricing theory. Here's a couple of examples of these two strategies. The cost of carry and the interest rate parity, very powerful strategies, which usually in down markets can usually provide the highest returns annually if you're in a down market, because this is what the pros use as a backup when things don't move as well as you'd like. And again, this can be done in foreign currency markets like the yen or euro dollar. Then we move into the yield curve. Very important to understand the fundamentals of looking at the yield curve and being able to measure both the long and the short ends, and be able to measure if that economy, whatever the central bank yield curve that we're watching, is going into expansion or recessionary set of conditions. Now, it's really important to understand about random walk theory. Everything is cyclical. Everything is historical. The problem is when you're trying to time it as such, there's a couple of big problems. Timing it's number one. I mean, you could still kind of use technical analysis. That's true. But the other problem is understanding the magnitude of those movements. And a lot of that cannot be really forecasted as well as you may think because of random walk theory, because the markets are always random. Many people will argue that, and that's fine. They're usually losing money and will not last very long in trading. The purchasing power is pretty hard to automate, but it's really important to understand because that enables you to understand the inflation between one country and another country, which is really the purchasing power. So this is going to give you a lot of really good arbitrage opportunity. Now we move into things like hedging and finding the optimal hedge, and being able to automate that is very, very beyond powerful. So for instance, if you know the markets are going to go down, you hedge, and you can hedge to protect your position and your overall portfolio by purchasing, maybe holding cash, or maybe holding a precious metal like gold or silver that will still go up as the markets go down. So you can maintain the value of your overall portfolio. Optimal hedge is being able to figure out what the optimal amounts are when you start to hedge. And then the next big area we move into is options on futures, which is really options market, but really looking at as a new way to trade a futures contract. Lots of examples provided, comparing the difference between an option and a future, understanding how to price an option, call put parity, very powerful, option trades, examples. And even though this is old school, this is really good to have an understanding of the Black-Scholes. This enables you to calculate your premium on what you should be willing to pay when you put an options call on. And the other cool thing about this overall course is you learn it from both the hedging and being a what do you call it? A prospector, no, speculator. Yeah. So there's two sides to options trading. There's the hedgers and the speculators. The hedgers are the guys that write the options. They're the ones that are taking kind of less risk, and they're usually going to be more on the winning side. But you have to have a really big trading account to be able to write options. I've got one options trader, that's all he does, and he's making boatloads of money. He's got a family and is able to go on. I mean, when I say exotic vacations, I'm talking about exotic vacations. Multiple times I've never known anyone to travel as exotic as this guy. And it's because he's able to write options and be able to just basically have money handed to him. But he had to get there, and he has a very large trading account. And he's actually going to be trading with me when we get to that level as I automate basically his brain. Then we get into the hedging options themselves, and then we look at when do you want to go with an options versus a future, and know the different scenarios. Really powerful information, and being able to not only do that, but being able to understand these markets or instruments, which is very, very powerful. Being able to automate is more powerful than you know. And I will tell you, if you get it right, you understand these instruments, understand the forecasting of them, you could build yourself a really big empire as you get more confident with this information. All right, so hopefully it'll help you out. Yeah, but this is where I want to go, is definitely in options. And hopefully I'll talk to you later. Over and out.